Hey, and welcome back. It is that time of the month again to go over the stats of what happened last month in Hamilton's real estate market, and we're going to obviously focus on October. Before I do that, I want to let you know that if you do want to book a call with me, you can do so using the link in the description below to book a call at a time that is convenient for you. So let's go to what exactly has been happening with this graph. So let's focus on some of the numbers we're starting to see are tapering off. Like where's my little marker there? So for instance, new listings hasn't really been fluctuating much. Very similar, like whenever they get to peak levels, we kind of see it at the same point. Here we're starting to see new levels are sort of evening out of new inventory. We don't have a crazy amount of homes coming on, more than the month before. We actually have less. And let's look at the sales. So the sales are almost the same as they were in September. I think there was only 30 more sales this month than last month. So that's pretty even, which is seem to be remaining consistently slow since we've been seeing the interest rates raise as well. In line with the interest rate raise, we can see that the average price has been dropping. But however, in October, one cool thing is the residential average price actually increased. So the residential average price right now is $790,000. This is down 7.8% year over year. However, the average price last month was $782,000. So we've actually gone up by 1% in the residential average from September. So let's see if we can look at some of the numbers and figure out why. I'm going to move myself over. We'll focus on sales, inventory. Can I zoom out a bit here? No, it won't let me zoom out. Okay, so we'll go through like this. So let's focus on the sales. So as I mentioned, sales were 455,000. Now there was 455 units. There was 425 units that sold last month, so we haven't seen a huge fluctuation in the amount of sales, but they are down 43.5%. So that is huge. There's almost half the amount of sales that took place in October this year than October last year. So let that sink in. And with that, there's actually a time I'm going to throw in a fun fact. Something that I just figured out recently was that about 80% of the realtors in the Hamilton and Real Estate Board have only done 7 transactions or less this year. So that really shows the 80-20 rule, where the top 20% of agents like us, Team Grande, we're still doing a good amount of volume, but it's just crazy to think that the amount of sales has dropped this much, and we're seeing it reflected in the industry as well. So that's just a fun little nugget for you. But let's talk about new listings and inventory. So the new listings and the inventory are basically, we're going to start talking about the supply and the demand here. So the inventory and the new listings is the supply. So the inventory that we had this month is 1391. So let's start first by comparing that to year over year. So that is a 200% increase, 191, almost 200% more homes on the market. Okay, so when you talk about the average price going down 8%, the price has gone down because demand has decreased because of the raising interest rate. So because that demand has decreased and the inventory levels have gone up by 200%, that's obviously going to result in the average price coming down. So that's why we're seeing that 8% drop. Is just basic economics, supply and demand. As well, new listings 956 is up 10% year over year. So we not only have more listings sitting, we had more listings that came to market this October than we did last October. So the supply is there, the demand's curbed. That's what's resulting in the lowering average price, in my opinion. I don't know, you might have a different one. But let's look at the months of supply as well. So months of supply, 3.1. So this number, again, I talk about every month, and I like to follow it closely because this determines what type of market we're in. So if you don't follow along, what the months of supply essentially is how many or how long it would take for every single house on the market to sell if no other listings came up. So this is basically what that means. So 3.1 refers to months. So it takes 3.1. Now to put that into perspective, the months of supply at the peak of the market was like 0.7. Like we're talking 3 weeks is what it was. So now 3.1 months, which is up 414% from last year. Okay, so 414%. So again, this is where we start talking about supply and demand. Supply, we actually got the word in there now, supply. The supply is increased, the demand has decreased, resulting in the average sale price. Because we're seeing demand increase, we have more inventory, more listings, but we have more months of supply and we have like fewer sales. So that just reflects it right there as well. Average days on market is 29.1. So this is obviously way up from last year at 145. It's also way up from last month as well. So we've seen that these listings are taking longer to sell. And it might just be because we have more inventory, buyers have more options, and there just might not be as many buyers out there. So now more than ever, if you're looking to sell, you really have to consider where you sit in the market, because you're competing with more homes that are on the market. Like if you're not one of the like top 3 to 5 most appealing homes in your price point in the area, then it's not very likely you're going to sell. It might take a little bit longer. So you really have to take that into consideration when you're pricing to sell this year. And as well as buyers, if you see a house on the market for like 30 days, that's not ancient anymore. So I know you're thinking, oh, it's been sitting forever. 30 days is the average now. You know, if something's been sitting for 60, 90 days, then we might have a little bit more leverage to come in and negotiate. But 30 days is a healthy amount. As well, if we break down the sales by type of property, detached, row, which is basically a townhouse and apartment. Hold on, I'm cutting off there. Let me see if I can move it. No, I can't. There we go. Detached, row, and apartment style. Semi-detached, it's hard to gauge. Like there's only 13 sales. It's hard to get a really number on that. I feel like semi-detached should just be thrown in with row houses, which is essentially a townhouse. But if we look at the average price, the detached average price has dropped 11% compared to row and apartment, which are down 7.5 and 6.9. So 7.5 and basically 7%. So this 11%, it's the biggest drop out of the 3 types of properties. I normally would go into some detail with that, but I actually have a video coming out talking about why detached homes are taking a bigger hit than row houses and semi-detached. That video is coming out later this week, so I'm just not going to touch it too much today, and I'm going to refer you to go stay tuned and check that video out when it does drop. But yeah, detached is taking the biggest hit as well. I want to go down to this chart that they just started producing, and I talked about it last week. Which is the months of supply in comparison with average price. I know I talked about it a little bit, a couple pages up there, but you can see 2016-17, when we had this dip, that's when we really started to see a spike in prices. Then they brought in the foreign buyer tax, they brought in the stress test, and things sort of leveled out with months of supply, and the average price sort of like leveled out with it. Then as 2019, we started to see, an uptick up until COVID. We were starting to feel it. You could see the prices with that were starting to increase. Then we had boom, peak COVID right there. That's why you have this drop. And then this is where we had that anomaly right there. And that's where you could see how we had this huge climb right to the top. Interest rates got announced that they were going to go up for the first time. They continued to go up. The average price coming down, or the months of supply coming up. So again, that's just touching on the supply and demand. The supply, this is a great visual of it. The supply has increased, the average price is coming down because the demand has decreased due to the increased interest rates. So that's just it on a nice fancy chart. And then as well, this PDF goes on to talk about some of like the sales by area. So Hamilton Mountain actually produced 25%, so almost a quarter of the sales of we're on the Hamilton Mountain of the month of October. So the Hamilton Mountain still seems to be very desirable, which and being a desirable area is always a good thing for that. And had a lot of units, and then followed closely by Hamilton East and Hamilton Center, and actually Stony Creek. But Stony Creek's got a pretty big footprint, so that doesn't really surprise me, the upper and the lower, and that's it. So Hamilton Mountain made up a lot of that action as well. If you want to see these areas individually, you can read them in this chart here. As always, I'm going to email this PDF will be in the email that I send to you this video in. But if you're just watching this on YouTube and you want this, just reach out to me. I think my cell phone number is in the description below. Just shoot it a text, and I'll grab your email and email this over to you as well. And then here is also just residential sales by area. So this breaks it down even more, not just Hamilton Mountain, but the different parts of the Hamilton Mountain. So this is very area specific. So if you're curious about your neighborhood specifically, let me know and I can get you this information. There's also some information on commercial sales as well. Not a ton, but you can kind of see what's been selling. Like what was the total amount of sales that we had 5, 6, 7, 8, 9. So out of all the commercial listings in Hamilton, there was only 9 last year. So commercial's taken a bit of a beating this year as well. But anyways, this is a fun little PDF that is starting to get put together by my board. So as I mentioned, it'll be in the email I sent this video in. And as well, if you want it, you can request it on YouTube as well. I'll get it over to you. But other than that, thanks so much for tuning in. If you guys ever have questions about the market or want to reach out to me, feel free to. I'm happy to answer any of your questions about what's happening with your home or strategies to sell or strategies to buy. I'm always here for you. Anyways, thanks for tuning in again, and I'll talk to you again next month.